All right, good morning. Merry Christmas, everybody. Welcome back to the channel. Yeah, we took a couple days off there for the holidays, but we're back in the groove of things now. So we'll see if we get much more volume this week than we did last week. Last week was a pretty good trading week. It wasn't too bad. Volume kind of slacked off there on Friday, but we did see just a little bit of volatility. We'll see if we get that volatility now. Bitcoin or oil's actually popping based on the fact that there has been 3 U.S. airstrikes in Iraq. I guess going after bad people. Who knows what's going on there? But that's what's got oil having a little bit of a bid this morning, trading back up into an old daily support swing low area. Basically, stocks are unched on the day for now. Right now, you got the S&P 500 up 12 points with a daily expected move of 15. So you're trading like right about where the daily expected is. There's still 3 points to go, so I wouldn't like be looking for shorts exactly right now on the S&P 500. Usually you get a surge of volume on the open. Bitcoin has dropped and has dropped a couple percent. We're down right now as of the second, 2.13%. But we did get lower. We did come down and tag daily support there. So we'll see if it's able to bounce. If we go into the intraday time frame, I did take a short on Sunday as price was trading right here in this area. And then basically, where was it? Right here. This hourly res right there is where I got short, took profits off, and then it came back and stopped me out on Christmas. And then, as you can see, overnight here, right at midnight, Bitcoin broke down back to the downside. So we'll see if it pulls back deeper. If I span it out there, you can see on the, basically it's not a really big move to the downside at all. It's just a small pullback. So nothing too concerning there. However, Bitcoin dominance is another thing. It's broken down. I mean, it's not a tradable asset, so I wouldn't get too concerned about it as of yet. Let me get over there. But you can see that it has broken down through a trend line that I got situated right there. So that's why you're probably seeing some alts pump, basically because the Bitcoin dominance is dropping. I think Bitcoin dominance would drop as long as Bitcoin is dropping. Another thing of note, I kind of thought we would test the 2022 bear market open. We have not got up there yet, but we did do that the last time we had a bear market. Obviously, everything isn't going to be the same with Bitcoin. But I have it drawn out right here. You can see there was your bear market of 2018. 2019 traded up to that price, the opening of that candle, and dropped. And then, of course, 2020 is when you had the bull market breakout. So, yeah, that's what I've been trying to tell people, not really to get too concerned with buying up here, because the last time we went into a cycle like this, or getting ready to start a new cycle, Bitcoin did have a significant correction. But as pointed out to me by a few other people, this move up happened a lot quicker in 2019 than it did here. As you can see, we're still trading up at 42K, whereas 46K would be that daily or yearly res, as well as the 2022 bear market yearly open. So we would expect a pullback for the rest of the year. I mean, there's only a few more days for this year start, and then over here is going to be where your halving is. So yeah, we'll see if that pullback happens or not. Like I said, I've been expecting it ever since we've been oversold on the weekly or overbought on the weekly. A lot of people are going to tell you that this is a bull flag. Technically, the formation would be correct. It is a bull flag. However, we'll see what happens, right? Only time will tell. And we look for short entries. Basically, the reason that I got short where I got short on Sunday was based on the fact that it was testing weekly resistance, and that is simply it right there. So I was just kind of watching it to see how it was trading. above that, see if it wanted to come back down. Upon coming back down, I took a short through my stop up there. Once I took profits, I moved my stop to break even, and that's why this wick caught me right there. That wick is prevalent on weeks as well. So if I just show you up top there, you can see this wick right there. That's the one that got me. So that's that. All right, moving forward, going to look for Bitcoin to pull back up to at least daily support, and then I'll look for a new short. I'm not going to short it if we hit that price exactly, 43.025, right? I'm not going to go ahead and get balls deep into a short right there as soon as it hits that price, but I will watch it similar to how I did over here. I basically exercised patience because we were trading well above the weekly resistance, and we had closed many hourly candles above that level previously. So I didn't want to short it right at the level until I felt as if though it was coming back down. You can see right here, I did go through a little bit of drawdown before it ultimately break down and then closed under. And at that point, I really wasn't even concerned about getting stopped out, because at that point, I assumed momentum would probably carry the trade back down to the downside. And it did. And it worked out. So it was a nice little trade there over the weekend on Bitcoin. Not really looking to put on a hedge anymore. Now I am back into full-fledged trading this thing to make some profits. I want to grow my Bitcoin bags. So now that I've traded weeks a few times, I am confident that they can handle my orders. So that's what I'm going to be doing. Looking for short entries just for the pullback. I'm not bearish on Bitcoin. It's very important for you to understand that. If you are new to the channel, I don't want you to be all like thinking that I'm some kind of uber bear. I am not. I do believe Bitcoin will go higher for at least the first few months of 2024. But it's going to be based on rate cuts and how big are those rate cuts and how often are those rate cuts. If they're cutting 50 basis points at every meeting, that's going to be looked at as a bearish signal. And if they are only cutting 25 basis points like every other meeting, that would be a bullish signal. But let's not get it twisted. Every time since 2001, rate cuts have not been bullish for equities. Now, they did go on to make fresh all-time highs in almost every case before rolling over. So, I mean, it is a bearish signal, but we could see 3 to 4 months of upside still on the S&P 500 and all those indexes before actually seeing it roll over. I do think it will still be good for the TLT. However, it's just my opinion. So if you are investing in the TLT, please make sure that you are managing your risk. All right, manage your risk. This has been a nice little consolidation. It does look like it's consolidating the gains, but we do see the bonds are having a pretty good day. Or not the bonds, but the yields not on the upper end. Not your 30-year or your 20-year, but down here on your 2-year, you're up a whole percent on the day. That's, not what you really want to see. And then if we go back over here to the chart that I was on, the 10-year, 3-month, you can see consolidation happening down there. So I wonder, are we going to be looking for the steepening event to happen? Now, if this does happen, if you look at that versus the S&P, you can clearly see that it did have a reaction. And that's what chart I was looking at when I went live. So there it is. There's your 0%. So as price was trading, or as this was going back up to that 0% marker, you can see the S&P 500 did have a pretty decent sized pullback. And that pullback bottomed out when the yield curve inversion topped out. All right, so you top out here and then you go straight down, the markets go straight up. So I would keep this chart on your watch list or somewhere, put it somewhere. Simply write it out how you see there. US10Y-US03MY. And then boom, you'll get this chart strike you a line at 0%, as that is the level it's got to get back above for normalization of the yield curve inversion, right? So, yeah, I mean, as far as yield curve inversions go, we are still massively inverted. And it was fixing it, but it dropped again. And we've seen that before, right? In turbulent times. You can get rid of this SPX real quick and just go back. Here, let's just put the monthly chart on. You can see over here, this 1 year here, or several years actually, you were inverted, you corrected, then you got inverted again, then you corrected again, then inverted again, and then corrected again. So 3 times from 1979 to 1982. It was a very turbulent period there where you kept getting inverted and fixed. But in order for America to run as a normal company, we need this yield curve to be back up in here. We will see a sell-off more than likely, but I'm not looking for anything like the Great Financial Crisis, right? Because once bond yields get fixed, once the bonds get fixed, the banks will be better. They will be okay. It's when the long-term yields are high, that's when banks are very, very nervous, right? But we have had a pretty significant correction from those high yields. And obviously, if the Fed funds starts to cut, or if it starts to get lower, these will continue down. And what we're looking for is that rate curve normalization. Not really going to help much for day trades, though, right? I mean, that's just for longer term positioning. But right now, you already know what I'm looking for on Bitcoin. Just simply waiting for Bitcoin to find resistance somewhere. And then I will look for short entries. It is a bull flag on the weekly. It does not look terrible. I'm not suggesting that it could have some kind of massive crash. In fact, it could come all the way down to 41,349 and find support, as that is weekly support. All right? So those are your longer term areas to watch for this week. However, this week is a very shortened week. So keep that in mind as well. Not very shortened, but it's going to be a 4-day trading week. So still shorter than a 5-day trading week. But anyways, Bitcoin trades 24/7, so that doesn't really matter. But the volume is just very light right now. Not a lot of people trading. Most of the firms will close down a week before Christmas, and they won't open back up until the first of the year. So yeah, that's what we're looking at. We're just currently watching that, seeing if we can get us a trade off here today, back to the downside, looking for weekly support to come into play. All right, as far as trading futures, we're not going to be doing that on TOS, or not TOS, sorry, tastytrade anymore, because the fees are outrageous. Very, very, very much so. So we'll just keep that to options trading moving forward, and we'll probably open up an account on Tradeovate or something like that for our futures trading. I just haven't figured out what I want to do just yet, right? But we are still going to be trading FX and everything else like we normally do. FX right now, I'm holding a long position on Euro USD and still holding that short position on USD JPY. Does look like USD JPY could be trying to break down here after pulling back into this swing low right there. We'll see if it does, right? That price is 141,894. So we're a full 10 points off of that 150 level where we were really concerned that it was going to break out up there. It still could find support down here as the yen, or the BOJ, I should say, did nothing. All right, they did nothing. So, yeah, they did nothing. So we'll consider that to consider continuation on the yen until they do something. But here's the rub. If we pull up let me see here, the economic calendar, and I'm going to show you something here. Let me get it back to just 2 and 3 star. Apply. Look at the BOJ core CPI. It went down. So their inflation rate is still 3%, or it was last month. They were expecting it to be the same because nothing happened, but it actually ticked down, which is pretty crazy. Yeah. So that's all they give me. They didn't give me the actual BOJ. It may be on it may be a 1-star thing, but that is pretty good. That's your year-over-year core. I don't know what the headline number is. That's maybe the headline number is still high. Let's see if it'll pop it up, because usually we get that. Let's see. No, that's all we got. We just got a core CPI number, which it's lower. So that's good news for them. Not so good for their currency. Currency future right now, as we are looking, you can see nothing's really moving other than Canadian dollar and the New Zealand dollar. Those two things are moving pretty decently, right around where they should be, moving up 0.4% on the day. So, yeah, those are your two strongest assets currently, or your two strongest currencies. The rest of them are pretty much unchanged on the day. So maybe some opportunities here in FX. I haven't found any trades that I love though. Aussie dollar's up 0.33%. Looks like it's wanting to take out Friday's high over there. Would not be shorting it. It's strong. As long as the dollar is moving down, we look for these things to go up. Aussie yen is a play that we were watching. We did not get a retest of daily support today. So that kind of sucks, right? We were looking for that. Did not get it. Pound dollar. As long as the dollar is weak, I would expect this to be strong, unless something massively bad happens over there for the British pound. So some investors, I'm not going to say a lot, but some investors I follow they're professionals. They are actually looking for the dollar to rally this year, 2024, with stocks. So they're actually looking for a stock market rally to keep happening in 2024, at least for the first 2 quarters. And they're actually looking for the dollar to rally as well, seeing how it's, the cleanest shirt and the dirty laundry, which is just a euphemism to say it's the best, or it's the best worst currency or whatever. The best bad currency. Let's say that. All currencies are bad. The US dollar is just the better one because it's the world reserve currency. So we're not, it's not necessarily my view just yet, because I haven't seen anything in the technicals that would suggest otherwise, right? I mean, we're all the way back down to this chop down in here at 101, right? 101, that's not very good. Not very good at all, seeing how we put a fresh yearly low in down there at around 99.50 right here, and then immediately reversed and came out of there. So I'm actually quite curious to see how does that look if we were to put that yield curve inversion up again and see what the dollar looks like with that. The best way to do that would be simply to compare the DXY to just to see something here. So there's not a whole lot of correlation there. I mean, there is a little bit of correlation. Quite a bit, actually. We just right in through here is where that correlation broke down, which this, as we know, was nothing more than just a monster bear trap on the monthly time frame. So we'll see if this actually starts to normalize again. maybe that does give lift to the dollar. All right. So if that's the case, if the stock market's still bullish, then I don't want you to continue to look to short dollar stuff because the market's bullish. Because the dollar can rally with the stock market. Keep that in mind. If you want to watch what's going to happen, keep an eye on this yield curve inversion. The 10-year, 3-month. You can watch the 10-year, 2-year as well, but the 10-year, 3-month is the one the Fed likes to keep an eye on. So keep that in mind. All right, so we're off and running. Let's go see what we're doing here on Tesla. Tesla broke out of a descending wedge formation as it had consolidated here for many, many days. We were trying to get long here, and we would already be out of that trade by now if we were able to catch it, but it just did not give us that perfect entry. But we do have things rallying here, so I'm going to go ahead and close. Let's see, the NASDAQ is taking off above 17,000. So on the futures, 17,073.50 would be your Friday's high. Wait a minute, that's a weekly time frame. Let me get back on the daily over there. I don't know why that thing is doing that. Here we go. This is last week's high. 17,073.50 is last week's high. And it is starting to get a little bit of a move up. That's going to be based on probably Intel, as it's gapping up pretty mad today. AMD's not really doing anything yet. Netflix not doing anything yet. Nvidia about to test Friday's open. So if Nvidia is going to roll over, I would want to see it roll over there. If it doesn't, then I wouldn't be looking to short it. All right. If it doesn't roll over there, I would not be looking to short it. And let's see here. So here is the Tasty account. And the positions, I'm still in CLS. That's gapping up today. Table, Nvidia. So what I'm trying to do here is I'm just looking for a spread to build on the put side. And it could work. Not really. Not really. You could do a $2.50 wide spread for a less risk, but you're going to be risking about what you could make. So not really a good spread. Still yet, we got to get that. We got to get that thing fixed. We got to wait for it to fix though. But if you are looking to short Nvidia, this is the price at which you would be doing that. Just be very careful doing it, because if it breaks out and starts to fly above it, then obviously it's probably going to go higher and you're going to get ran over. S&P 500 futures trading at 48.13 right now. Let's go back on watch and get, where are we on the SPX? We're at $9. So here is your expected weekly move. Even though it's a shortened week, it's still pricing in a lot of volatility. That's a pretty good size range there. Last week we bounced off of it after hitting the upper edge of the expected move. This week, we're just gapping up just a hair, but still yet gapping up nonetheless. So when this number hits $15, that's about what was expected for the daily range. So we'll see, is it able to get a short squeeze going today? Today becomes a trending day, then you could potentially look to buy SPY calls right? Because you will be breaking out. Let's see where we are on the year. You're right at yearly res, man. Right at yearly res. So a breakout could see a nice move up to 480. I hate getting long into resistance, though, and that is a big one. It's a massive resistance level. You can see what happened when you tagged it there on that day. That was a pretty big down day. A lot of investors were nervous, thinking that potentially the rally is over, seeing how you threw in a big fat bearish engulfing at resistance. But we typically don't concern ourselves with bearish engulfings in uptrends. It's only in downtrends do we look for those bearish engulfings to provide good sell signals. When you're in an uptrend, you look for those bullish engulfings and you look for buy signals. Right now, everybody's just as bullish as they can be on everything. So I wouldn't be trying to short it just yet, right? We need that yield curve normalization to happen before we start loading up on bearish positions. On this, you can see if I go back to positions that I do have this right here. I sold a put on the S&P 500 futures contract, the micros, sold the put there, and I hedged that short put with a downside spread, so a bear put spread. That's why this is losing money. It's just a put spread, but it's only a hedge. It's the hedge against this put because I know that if the market was to come off, it'll come off hard, right? Is you usually catch the elevator down, take the stairs up. Unfortunately, it did it inversely here. I mean, that is one of the biggest rallies I've seen in a while. That quick. It was very quick. I mean, it didn't take no time, and you were right back up there around all-time highs. So there's your all-time high on the SPY at 480. So we'll see how this plays out today. SPX, I wouldn't doubt it a bit if it does not struggle at that $15 mark. If you want to look at it on the futures, we can, as I'm not going to be trading it. But there you go. You traded right up into that upper edge of the expected move. Where is the lower edge? All the way down here at 47.84. So the market was expecting a $15 move higher or $15 move lower from the close on Friday. And so far, pre-market, you've already gotten that $15 move higher. So a lot of people are going to be looking to take short entries right here. But you haven't gotten the $15 move higher yet on the S&P. This CLS trade, let's go take a look at it. It was a breakout trade, like something that I usually tell you guys not to do. But I don't want you shorting, obviously, into all resistances. Only if the asset is in a bearish downtrend. That's when you look for short entries. You don't necessarily look for short entries at resistance when an asset is moving straight up like this. Because, I mean, only if it's for a day trade scalp, but not for a long-term trade, you're probably going to get stopped out. It's a clear and obvious rounding bottom formation there. And then the fact that it was right back up to resistance, I went ahead and bought it right there, 27.75. I bought a call. So we'll see if that thing is able to get any kind of breakout going. That is all-time highs or no, it's not. Sorry, I keep forgetting this thing's got a long ways to go before it hits all-time highs. But all of this was back in 03, right? So now I don't know if it was trading as under a different ticker back then, but you can clearly see that it is very, very bullish and has been for a while. Has been ever since earnings came out. So you sold off on an earnings beat, and then boom, up she goes. So yeah, I'm going to try to keep that position open for as long as possible. I might trail a stop to today's open. I'm not quite sure yet. Because it'd be a shame to get stopped out of that and then to see this thing go up to $32, $33 because this thing generates pretty decent money. AI, this move here lower, I still like it. If we pull up the moving averages, you can see it's like pulled right back into support. If we start closing dailies under 28.27, I no longer like it for a move to the upside. AI is a pretty heavily shorted stock. Oh wait, I needed to pull up FinViz, not that. All right, so we can type AI here in this area, and you can see that it does have a very high short float at 34%. So I'm looking to see if maybe we can get a breakout to the upside on AI, as it is still structured bullish on the daily time frame. What's going on with that? As you can see, you did get back under the 50 here, so people are going to be looking for shorts on the near term. You did break out. This is a false breakout. If we go to the weekly, very false breakout. There's your weekly resistance. We traded well above it, and then this was the end result. This entire down move happened in 3 days last week. All right, so although it is at an area that I still like for potential support, it needs to show me something today or tomorrow, as I'm not going to sit in this trade and take a big loss. It needs to start moving back away from this stuff pretty quickly. So that's one you can watch if you want to. All I did was bought a call, $28 call. It's cheap enough to just buy the call instead of doing a spread. So we'll keep our eyes on that. Dollars down. Oil's now pulling back a little bit. So it did break out, took out that swing high right there. So there could be an oil short here. Maybe. On the daily time frame, the oil is still down. We still like oil lower, but like I said, there was airstrikes that happened, and usually oil will move higher in times of war, especially if the U.S. gets involved. So we'll see, but just keep an eye on that 74.99 level. That's that old daily support there. But if it can get back under that, like this is going to look like a run above the stops and then a roll over. If it does indeed roll back over, oil is very volatile, so be very careful with it when you trade it. The macro oil future contracts the spread is terrible when it gets volatile, so I don't know if I would go that route. Or if you have a futures account with someone better than Tasty, you could just trade the micro contracts. It moves $1 per cent. 1 cent is a tick on oil, and that's $1 a tick. So the regular CL futures would be at $10 per cent. But NASDAQ's flying. So is the S&P 500. S&P 500 pushing up above 48.15 on the futures side, but still haven't hit $15 here yet on the expected range for the SPX itself. So the SPY still not really doing much. Can we put on a SPY call spread? We just want to do it for like a few days out, probably longer than 8 days. So give ourselves 24 days. See if we could put on a bullish call spread. The skew does work for us here. No, it doesn't. Shit. The skew doesn't work for this. We need the skew to get higher. We need the implied volatility to get higher as you get further out of the money, because that's the one you're going to be selling. So you're buying a higher implied volatility. It's not good. It jacks up the price of the premium is what I'm saying. So what would this be? A $3 wide spread. You can see your max loss would be more than your max profit. Yeah, nothing going there. 0 day to option, a 0 day to expiration option. Maybe you could buy a call. If you do, I would buy it right at the money. Right? That's what you're risking there. It'd be $60. I would not go much further out of the money. As you can see, well, shoot, let me get Epic Pin pulled up. Where are you, Epic Pin? There you are, Epic Pin. You can see right here, right around 46.50 is what the expected move would be for today. So going outside of that, you're risking the entirety of the premium, as these things are going to expire today. But there are a bunch load of people jumping into this already. I'd say a lot of this stuff has been rolled from last week, but we'll see how it plays out today. As long as the futures stay bullish, I would expect that to break out. So why is Bitcoin pulling back on a day where risk is bullish? I don't know. You don't even have dollar strength to be the concern or the cause for that. USD CAD's just Canadian dollar strong today, and as long as USD is weak, this is going to go down. So we're going right back down into that chop slop. Massive range this thing is trading in. Massive range. Let's see where we are on the monthly here. You're coming into monthly support, but with a ton of volatility. Or momentum, I should say. Whenever something is this momentous, I don't really want to try to get long on a retest of monthly support until it actually holds. You can see daily's chopping through that. So not a trade yet there. VIX is up even though the S&P 500 is up, which is weird. VIX is up 4.68% on the day. It's just because it gapped up from 1301 up to 1375. The VIX is too expensive to trade right now. The VIX is too expensive to trade. You can find cheaper ways to look for those opportunities. See how your implied volatility over there is just massive. I love it when people say there is no volatility in the markets. When the VIX, 0 day is up almost 160%. There is volatility in the markets. You're sitting at 13 VIX when the marketplace is up 20 something percent. That's the VIX. Usually the price of the VIX, that basically means that's what the market could do in a year. So like the VIX is sitting at 1365. That means that the S&P 500 could potentially move 13% in a year. So there's definitely a huge discrepancy between those two assets. And 0 days to expiration options is the root cause of that. That's because no one can see risk very far out. And as long as the VIX can't price risk 30 days out, it's going to make it difficult for options to be priced correctly. Usually the best strategy would be to sell calls in a time like that, because your call strikes are going to be worth more than your puts when you have a low VIX like this. But you don't want to sell calls on something that's going straight to the freaking moon either. So you can see this is above that $15 mark, but the SPX still isn't. And the SPX is the product. That's the mother of all products. This is where most of your option traders are. Inside of this thing right here, it's close to resistance as well. And then once again, if we go look at the grid, you can see it's definitely struggling a little bit around that daily expected. You made a fresh, overnight high. Because this all happened on Friday. Right there was the close. Yeah, so you just made a fresh overnight high and you rejected a little bit there. But I would still probably expect a trend day to occur today. Let's go look at all the sectors and see what we got going on there. Yeah, most of your sectors are bullish with some minors down. The biggest ones are up except for healthcare. But it's neutral on the day. Healthcare had a pretty nice move from the lows. Oh, and something else I want to show you guys, because I know you're probably hearing a lot of macro investors out there claim that, the market's just, we don't like it as long as it's only one or two stocks holding up the market. That is not the case anymore. It was the case earlier. Was the case earlier. I'm looking for something. Here you go. So this is the Invesco 500, S&P 500. So it's the same stocks in the S&P 500, only with an equal weighting. So like Apple and your tech stocks are not going to have as much of a effect on this because every one of them are equally weighted. This shows you that there's a broader market move, right? The majority of the stocks equal weighted are up pretty nicely now. So you're up almost 11% on the equal weighted index. So you do have that broader market move. You do have your US 30 making fresh all-time, or not fresh all-time highs, but fresh yearly highs. And then the Russell, nice move there. That's what you want to see for a rally to continue. You want to see those moving as well. So this rally is legit. Yeah, that's what I thought. There. This one says US 30, Dow Jones Industrial Average, is making fresh all-time highs. But on the index, it's not. Average index. All right. I don't know. Those should be exactly the same. But they're not. There you go. Dow Jones Industrial Index is making fresh yearly all-time highs. So, I mean, the overall broader market looks good, right? So the rally can be sustained. So you would be looking to buy pullbacks into support. We haven't quite got a fresh weekly high yet on the NASDAQ futures. S&P pulling back into its VWAP this morning here. So you're off a little bit. You're still up on the day, but I mean, we were looking for it to get to that $15 mark. Once the SPX itself gets to that $15 mark, that's basically when you would want to try for a short if you think it's going lower, which I don't know if I would be thinking that. This is the most honest and objective trading channels on the YouTube. Thank you and keep up the good work. I try. I trade real money on this. So when I lose for real. When I win for real. So yeah, appreciate that. And I'm just trying to help people understand, there are places that you can watch for entries. And, if you're looking to be a trader, this is definitely a channel you need to be focused on, because I'm going to show you the right areas to look for trades and when you should be looking for those trades. And the directional bias is the hardest part for anybody to get, as well as me too, right? Like, I can't see into the future. I don't know if today's going to be an uptrending day or a downtrending day. I don't know if it's going to be a trending day. It could be an inside day. You know what I'm saying? I have no clue what price is going to do. But we do have areas where we know we should be looking for trade entries. The way you make money in trading isn't knowing which direction the market's going to go. The way you make money trading is by losing less when you're wrong than you do when you're right, right? When you're right, you want to make twice as much, if not more, than when you're wrong, which is why on this portfolio here, whenever I get close to that, like this area right in here, I'll usually close the trade down, because maximum risk is going to be $60. That's a 1% risk on the total equity in the account. We're not so much anymore, but yeah. So yeah, that's what we do. So if this thing moves up another $10, we close this trade down. And then you can see here with CLS, it's up 110. So as long as you can maintain that, then you're going to do just fine. Like I said, I don't know which direction the market's ever going to go, but I can teach you how to be a profitable trader. And being a profitable trader, there's only one thing that you need to be able to do, and that's to be able to beat the S&P 500 year over year. If you can do that, you are a profitable trader. You're in the 10% of best traders in the world. As a matter of fact, I was just talking about this the other day. Citadel, which is a huge market making firm, but they also take clients' money. They're an investment firm as well. They were only up like 13% on the year as of like October. We're beating them, right, with that portfolio. On the options side of the portfolio, we're beating them. We're kicking their ass. We're up over 20%. So, I mean, when you can beat someone like Citadel, but let's be clear here. Last year, Citadel was up 34%. It's just been a rough year. It's been a rough year for everybody. Not so much for us, but for everybody else. It's been a rough year. We make it easy here. It's simple, right? The bias changes when the weekly 21 changes. That's when we're done, right? We're bearish as long as prices are trading under the weekly 21. We're bullish if prices are above the weekly 21. It's simple as that. We look for those entries at the best places, weekly opens, weekly closes. And we manage our risk. We're not trying to shoot for 100x positions. Anytime you see a lot of people like on Twitter showing that they had a 100x position open on a certain asset, yeah, they might have made money that time, but how many times did they not make money? Because I got news for you. On a 100x long or a 100x short, you better be right exactly, or you're going to get liquidated in a matter of seconds. How many times have they been liquidated? What's the size of the account? Because I promise you, nobody's going 100x, not a professional trader, is going 100x leveraged long on a $40,000 position, right? That would be stupid, knowing that you could be liquidated just from a little 5-second spike. Boom, 40K gone. No, real traders don't do that, right? They're probably doing it with a $100 or $200 account. And whenever they get lucky and they hit the 100x long or short, then they post it. They don't ever post their losers. I post winners, I post losers. I don't give a shit. I know overall and on the long term, I'm profitable. So people can choose to believe it or not. If you want to believe it, hit that subscribe button. Hit the follow button over on Twitter. I don't post a whole lot of trades on Twitter, but when I do, you can believe I'm taking it, right? If I'm taking it, I'm posting it. So yeah, that's that. That's just the way I roll. Magnificent 7 is too extended, in my opinion, to be looking for bullish entries. Apple had some bad news in China. I don't know how big China's sales are when it comes to Apple. Like, I don't know how much of the percentage of the market for Apple's profits is actually in China. And then once again, you got to think China is a massive country that have more people than any other country in the world, and it's only the government officials are the ones that are not allowed to buy it. Normal people can still buy iPhones. Just government officials are banned from owning iPhones, which is not good, right? Like when a nation says, "Hey," that would be like the U.S. saying we're not allowed to own anything made from anywhere else other than the U.S., right? That it doesn't look good. It doesn't sound good. It almost sounds like they're getting ready for war. And I don't want to go to war with China or Russia or anybody. War sucks. I want to sit back and watch my portfolio grow. And it can't do that in times of turbulence. Well, it can if I'm on the right side of the market. But I think that's why a lot of people are trying to get short right now, thinking the whole world's about to die. But the market goes up 80% of the time. It doesn't go down. It goes up. Yeah, every now and then you can get lucky and nail a short and make some money, but the majority of your money is going to be made being long, not short, owning the assets. Bitcoin is a little bit different because there's just too many unknowns with Bitcoin for investors. Like, it literally is worthless. Like, there is no, it's only worth what the market says it's worth, right? Which at one point in time could be $75,000 to $80,000, or it could be $10,000 or lower. Like, it's too volatile. With this, you know what you're getting. Like when you buy a Microsoft share, you know what you're getting. You're buying into a company that generally makes money and is the big. Apple and Microsoft are the two biggest assets in the S&P 500. Their market cap, by market cap, they're the biggest. So they highly affect what the S&P 500 does. You got Apple's a small down day today, and Microsoft has been doing this rounding bottom formation, which typically is bullish. I mean, it's a cup and handle, right? A rounding bottom is a cup and handle formation. It's what it's doing. You've had a pullback, you're consolidating. You're at the upper edge. In fact, you've broken out. You broke out Friday, closed above. The question is, can it maintain the breakout? Should we pull back into 375.38 and then move higher? You already made fresh all-time highs right here. So fresh all-time highs, pull back, consolidate, go. That's typically what you want to see in a bull market. Consolidating around the 21 exponential, You had a nice pullback to the 50. This would have been the best day to enter on. Wait till the close and buy that biatch. You don't have to day trade the first thing. Well, day trading's best for the first thing in the morning, but your bigger investors, the ones that are looking for those multi-day trades, I'm going to sit in this thing for a week or two. They're looking for the better pullbacks, the better entries, and they're usually waiting until the end of the day as they can see, hey, is this thing going to make it or not? Whereas AI was a big fake out. That's why a lot of times I'll post in the Discord, I'm waiting for the close. I want to see how this thing closes. But I waited for the close, right, on that day there. And it ended up, what happened the next day? It broke down. That's not good. Not good at all. But I'm hoping this is going to be nothing more than a bear flag or a bear trap right in there. I want to see that act as a trap, get people bearish, and then load up and see it go again. Because it has been consolidating for a long time here. You can see that, right? A lot of consolidation and then a move higher. So I don't know why this thing is doing this. Why is this so wide? Right? Very volatile stock. It's heavily shorted, so that's why this breakout failed. People were waiting for the breakout like it because it'll put us in an area where I don't want it to be. Right? Any closes under that 21 exponential, which is the yellow line, any weekly close under that, I'm done. I'm done looking for bullish entries because A, either it's going to go lower, or B, it's going to be a choppy sideways trade, and choppy sideways trades aren't the kind of trades we want to get in. We want to get into the trades that trend. Dollar is trending lower. It has made a fresh low day. And it's even taken out its overnight lows. And S&P 500 on the future side is moving up, making a fresh daily high. So that bounce off of VWAP right there would have been a decent bullish entry for you futures traders out there. Give me a second. I got a lot more screen real estate now, so it's a little bit more difficult to move these things around. But I wanted more screen real estate so I could pay attention to stuff while I'm live. So even though I'm live and talking, I still have my eyes on the prize. But the only thing I'm kind of watching today is AI. Now, if you have a stock that you know of or you think is a pretty decent setup, drop that bad boy in the chat. Good night, guys. Good night. Love you. Have a good night. Mr. Funny 3D Animals. But yeah, if you think there's a trade, well, there's not really a trade on Tesla, is there? We were just looking at it, right? It's already made its move to the breakout. Retest would have been there. Which wasn't quite where I wanted it, but that would have been the area to buy it. If you buy it right now, you're buying it into resistance. This was the actual entry point. This is the line in the sand. This is where we were looking for the bullish entry. It just got too bullish that day and ended up closing halfway up into the range. This would have been the entry. That would have been the stop right there. So now we just got to wait for Tesla to reconsolidate. One could argue that this is a consolidation, for a week, but it's not a great consolidation, and you're at resistance. So, I wouldn't short it. There's no way I'd short it because the bulls are in control. You can see that by the momentum oscillator. Anything above 50 means the bulls are in control. But at the same time, you don't want to get long up against that resistance because so far it's failed every time it's gotten above that price, right? It failed here on this day. It failed here on this day. So getting long there again, it's kind of wishy-washy. Now, if you close above this price, 257 today, then tomorrow you could look for a retest of 257. And if it holds intraday, then you could potentially get long and target 270, as that's this high right here. But it has been consolidating. It's just we missed the entry on it is all. So that's kind of my bad there. We should have took the trade when we were live that day, when it was a doji. We should have just went ahead and got long, used a spread to do it. Because I did build a spread that was at least a 2-to-1 risk to reward, and it would have worked out in hindsight. We use spreads to help mitigate our losses, right? We're not using spreads because we want to cap the gains. We use the spread to cap the losses. It's impossible unless you buy a cheap option. But if you buy a cheap option on Tesla, you're going to be way out of the money, and you're probably going to lose. That's not a high probability trade. So here's some of the things that we were watching. We wanted to get long LMT, but the spreads on the options were too much. So I'm probably going to go ahead and get this off screen or out of the watch list for new positions. There's your long consolidation there. This is obviously support. We knew it was support before we ever retested it. Right in here is where we should have got long on this. TLT is consolidating, but it's had a big run, and this is a very small consolidation. Very small consolidation. Last week, however, did close red. So if you do want to buy TLT, you technically could, but just make sure you manage your risk there. This level here is just an old, you can see how you opened right there on that price and dropped. You can see how you opened on that price there and bounced. It's just this swing low right there. So it is an area of resistance. And though we did trade above it, we closed 1, 2, 3 dailies above that price. The last 2 days got us back down under it. So you're right up against resistance again. Right up against resistance again. So buying it here, this thing could end up closing down here today. So your 30-year, we want the 20-year though, because that's what the TLT is. It's the 20-year. A little bit of a rounding bottom happening down here, right? So you got to be careful. If this goes up, the TLT is going to come down. This is just inverse to the TLT. And it's right now testing a support. This was a trap because you took out the high. Now, if you take out this area down here, then it wasn't a trap. But for now, we have to treat it as such. But it is in a downtrend, obviously. I mean, that's a massive move lower. Happened very quickly. And then pull up your moving average. You can see this is when you lost the uptrend here. But for several weeks in a row, it's been moving in one direction. See, we got to give this thing a little bit of time to consolidate or break down, one of the two. But still, I mean, if you're looking at the TLT as a long-term hold because you believe the TLT can get back up into the 140s, then buying it at 98 is still cheap. You just might have to sit in a drawdown for several weeks. But eventually, You know, if what I think is going to happen happens, I think the TLT is going to be a good thing to buy. When they start cutting rates, that should be very bullish for the TLT. Should be. That's why you've seen this thing do what it did. The market was pricing that in. So could it run now that it had a 1 week of consolidation? Yeah, it can. Look what happened here. You had 1 week of consolidation and boom. So, I mean, it could continue to go higher. I just want to see how it closes at that 98.88 level. If it closes under, we'll wait for it to get a little bit lower. Maybe come down into the $97 range and look for a buy there. Near term, you're bullish. Long term, it's bearish. But, I mean, it's broken. Like, it's so bearish, it's broken. But I do believe it will go back up. This is where your 401ks and stuff are, right? They're in this type of stuff here. So that will end up getting bullish again. It's just that those rate hikes, the speed at which they went and did that, it killed the bond market. Literally crushed it. There's your 30-year. I mean, it looks bad. 10-year looks bad. 5-year crushed. Right? That's because everybody went into the near term. They left the long term, went to the near term. They can't see out very far. They can't price risk out at a far distance, which is why it's been a very difficult year for investors and traders. You know, some traders, the 60-40 guys are in this, right? 60-40 hasn't been a good year. The magnificent stocks that they do own, they did outperform, so their portfolios are up, but they're not up big. Like, they're probably just barely up based on the sheer amount of losses that were incurred on the TLT in 2022. That is an insane amount of losses there. So I do believe it is a good asset to get back into for a longer term hold. Right? That's just my opinion, though. It doesn't mean it will work. So that bullish close right there, the highest bullish close we got in this move up, closed right at 2022's close. That's pretty fantastic. Pretty fantastic. LTCN. LTCN. Woo! This thing is freaking rocking and rolling. No way in hell would I buy this right now. Like I said, you're getting altcoin pumps because of, at the beginning of the stream, we discussed that Bitcoin's dominance is going down. So a lot of your alts are pumping. But I mean, ask yourself a question. If you didn't want to be a buyer at $5 or $3, why would you want to be a buyer at 15? Would I short it? No way in hell. Because you've seen what happened to Bonk, right? How many people were shorting that thing? They got absolutely destroyed. Destroyed. I think it was up at one point like 16,000%. That is just insane. Although it's not the rug pull I figured it would have. Why can't I get out of this? Thank you. It's not the rug pull I thought it would see. It still isn't something that I want to buy either. Because even at that price, you're still up some 19,000%. That can't be right. Yeah, there you go. That's about better. 2,000%. It's just massive moves, man. Crypto can move when it wants to get going. I did look at the week's watch list here, and there are a few of these things that are up pretty good. Binance Coin, for instance, today is up pretty damn good. C98, it's up pretty damn good today, up 12% on the day. You got a couple that are around 5% up. And these are just the ones that I had when I had the Big Get watch list. So there's probably other tokens and shitcoins that I don't even have that are up worse or better. You know what I mean? Up 13%. This thing, that's just today. Here's one though, Solana. It's down 7%. So do I think people are going to try to buy this at 112? Yeah, but I remember when FTX collapsed, so many people were saying Solana was going to zero. Zero. Now it's up 100 to $112. Like, it's a short squeeze, obviously. It's a short squeeze. When Bitcoin gets the rockin', a lot of these things will too. And then you got your laggards. But this thing already had an explosive pump. Uni's up 8% on the day. Yeah, you don't want to buy things like that. I mean, if you're a momentum trader, you want to buy after you take out daily highs, not when you're making fresh yearly highs. Some people do that. That is a strategy. Some people buy 52-week highs, they sell 52-week lows, but you better have immaculate risk to reward when doing that. And when these things are moving like that, you can get hurt really, really quickly. LTCN is the Grayscale Litecoin Trust, but that means Litecoin is rocking and rolling. 675%. You have missed the move. Litecoin has done nothing. That is weird. That is very strange. I don't know why this thing's moving and Litecoin isn't. It's just a short squeeze is all. Let's see what the short float was on this. All right, so never mind. I can't find the short float on that. Not through Finviz. Maybe another website does, but Finviz doesn't. Yeah, be careful on that. Now, if you own this thing and bought it down here, would I be taking profits? Hell yeah. I mean, 600%. Dude, that's a 6x on the account. For sure, I'd be taking profits. SPY struggling with a resistance. SPX 1350. It's trying to get to that $15 area, but it can blast on through that. Dollar pulling back off of the fresh daily lows. NQ pulling back off of fresh daily highs. The same for the S&P 500 pulling back off of fresh daily highs. Bitcoin's still not really doing anything since we started the stream. It did have a little bit of a down move here, but it's starting to get a little bit more of a rally. Like I said, I don't want to short Bitcoin down here. I would rather short it up in this area, or potentially up there, right? This is weekly res. That was the ultimate area for the short. I just got stopped out because I moved my stop to break even but that happens. That happens all the time. Happens all the time. Let's get a fib on here. Where are we at? So we retested almost the 618. So it looks like Bitcoin's basically just retesting last week's range. The 50% level is right here. Yeah. And it's a bull flag on the weekly, so people are probably going to be looking to buy it. Since risk assets are still very bullish, Euro USD is pushing higher. And that's going to keep continuing to go higher as long as the dollar is pushing lower. Zero drop frames, but still the stream is lagging a little bit for some reason. And I'm pumping out fast today. Internet was cruising this morning. SPX above yearly res. This is the CFD. So the CFD is doing good today. I did go ahead and put in all the 500 stocks that are in the S&P 500. So I will look through all of these later on today and see if I can find something to trade. Here, let's get on a different one. Maybe that's the problem. Yeah, let's do this. Need to pull back on that. Apple, AbbVie's at resistance. Airbnb's pulling back. So we did take a trade on this, but it's over with. And it's pulling back because it's in a range here from 113 up to as high as 153. That's a big range. Daily support on Airbnb is going to be around 135, but it could find support here. If it does find support in this area, maybe we look for another long entry on Airbnb. Nothing to do there. Nothing to do there. ACGL, Arch Capital Group. Wow, this thing is super bullish. Is this optionable? It doesn't have weeklies and it's got earnings coming up, so yuck on the spreads. This is a no trade. Yuck on the spreads. But it's at weekly support. I'd give this thing a little bit more room to pull back. Maybe $65. Then it might be buyable. You're overbought on that. Adobe putting in bearish div right there. Pulling back. Let that divergence play out before looking for longs on Adobe. ADI just had a fresh breakout. Looks like all-time highs. Nothing to do there. So yeah, I mean, I'll look and see. This one might be a long, I don't know. There's no bullish dive, there's no bullish div on the weekly. I mean on the daily and the weekly it's a sell. But it's at the bottom end of the range here. So we'll call it that support, $70, 4 cents. As long as we don't close below that. Let's see if this is tradable. Yeah, this has weeklies, 10-cent spreads. Not bad. So this is tradable. So we'll put ADM over on positions. Just to kind of keep it on watch. And I'll let you know if I take a trade in it. So AI trying to bounce, but not really doing very good. CLS, it's struggling. Like, I really honestly thought this thing was going to break out, but to be honest with you, the size of that range and where the breakout is, it's almost a measured move. Not quite, but almost. Like $31 would put it right at the measured move. But you just got to get to the point and ask yourself, how much more juice do you think is in that lemon to squeeze? So we'll see. I'll keep it very closely on watch. If it closes or it looks like it's going to close red today, I'll probably take the trade off. As it's very much in profit. It's up 2%. Up 2%. Looking for resistance. Oh, on LTCN? Well, I mean, it's going to be wherever the market decides it's going to be. I can give you a level to watch for potential resistance, but it doesn't mean it will be resistance. Yeah, you're currently trading above where you would expect resistance to be. Around 15.17. As that's your lowest bearish close after putting in this one, obviously. And then you broke through there. So, yeah, probably roughly around this area. Like I said, I don't know if I would short it, though, because if it's in the midst of a short squeeze, it can squeeze much higher. It can continue to go. It got as high as 17% on the open day. It's moving. Be very careful with it. Been watching the streams for a while. Can I join your Discord to share the trades I take and eventually discuss them? Yeah. I mean, the Discord it's not a free service, but if you want to join, there's a link in the description. Costs less than $1 a day. There's a link in the description. You just got to sign up for Patreon and do the prop firm tier. And yeah, I will do my best to help you. The reason I charge for it is because people, I give them 24/7 access to ask me questions whenever they want. And to me, it's got to be worth it's got to be worth at least $1 a day. Because I do all by myself just fine. You know what I mean? But I don't mind helping. Do not mind. But yeah, what's oil doing? Did it finally break out? It did. It did close above on the hourly. See, we're watching that hourly to see if it was going to close above that daily support. And it did. So we would leave it be for now. See how you liquidated that wick? And it looked like it was going to pull back, but it didn't. I mean, yeah, oil is probably not going to break down today. It just broke out back above the 50 on the RSI. So as long as it can maintain that on a daily closing basis, a lot of people will start looking to buy calls on oil. Oil is fun to trade because it moves very fast. But it's also dangerous trade because it moves very fast. And it has some weird, wicked reversals. Amgen was one we were watching for bullish entries here at 273.26, but I couldn't get the spread right. I just couldn't get the spread right. And I believe the spreads were very, very wide also, AMGN. And I think that's ultimately what made me decide not to take it. Yeah, they're wide. Yeah, they're wide. You're looking at almost $1 wide. So yeah, that's why we didn't mess with it. Philip Morris, another false breakout here. We could potentially look to see if this area holds as resistance. If it does, we could buy a put on Philip Morris. The puts are cheap. Got a low IV. Since it's got a low IV, that means it's easy to manage your risk. That means the option isn't going to like go crazy. So you could take the in the money put. Watch today's close on Philip Morris, PM. Just simply because you broke back down here. Now here's the thing, it did it here too, and that ended up being a trap. But ultimately it did break out and then reject. You see a lot of longer term chop there. Weekly looks good for a sell. So you're literally testing last week's open right now. But we won't know. I'm not waiting around for a weekly close. As long as we close today back under this 92.83, I'll buy a put on Philip Morris. And then if it gaps up tomorrow and I'm, get to my risk limit, I'll close it. But if it fails to close above this today, I think it'll probably gap down. A 1.3 dividend, that's a pretty healthy dividend. Yeah, it's just long-term trading in a range, so you could either go the route of selling calls or buying puts. There's just not enough implied volatility on the calls to sell. Hey, this is up here's 2 standard deviations. There's no premium up there. None. Right? Not worth the risk. Whereas you could just buy an in-the-money put or an at-the-money put and see what happens. The reason I say in the money is because if it does gap down tomorrow, you'll instantly be in profit because you'll be in the money. You know what I'm saying? And you'll get that premium back plus whatever extrinsic value you have from it being in the money. But it's a slow mover because you can see right here is still just $92. So if you buy the $93 strike, if it were to gap down and get all the way down to under $92, like $91.80, then this right here will be worth this. But you can get it in the midpoint, so it'd actually be worth $230. $230. Not open interest, not a lot of open interest, or not a lot of volume there. So there's a lot of news articles going around saying that Nancy Pelosi bought $5 million worth of call options. There's not enough open interest on Nvidia at that strike price for her to have spent $5 million, but there is enough open interest at that call. If I said put, I mean call. She bought the D's 20s, 2024s. So a year out, she bought the 120 strike. Such a weird freaking trade. The 120 strike is here. So you can see since that news broke, more people have participated. The open interest as of Friday was 55. So there was 55. Now it's 80. So people are taking a very dumb trade. Do you realize that if Nvidia just trades sideways for the whole entire year, how much money you're going to lose on theta decay? Just because the option is in the money, it does not mean that you no longer have theta decay. Theta decay happens regardless if you're in the money or not. All right? And this is, make no mistake, this is a one-sided trade. It is a bullish trade. She paid 38 grand per contract and bought like 50 contracts. Very strange trade. I guess it wouldn't take much though, really. Like just a $20 or $30 move higher and she'd make a decent amount of money there, but it's got to go higher. It has to go higher for her to make money on that position. All right, so if you heard that news and you were wondering, I did post that there wasn't enough implied volatility, but my math was wrong. It's because they said she paid $5 million. Right? That's why I was like, nah, it's bullshit. It's not true because there's not enough open interest for someone to have spent $5 million at this strike. Right? But we can do the math. We can do the math. So 381.20 times 100, because you're buying 100 shares. That's 38,120. So times 38,120 by 50, and you get 1.9 mil. The reason I say by 50 is because that's how much open interest there was. All right, so you could do 38,120 times 55, and you still don't get the 5 mil. You don't even get close to 5 mil. You get 2 mil. So either someone's reporting is off or they're just wrong. And she can't hide this. This isn't like tastytrade's open interest. This is the Chicago Board Options Exchange open interest. All right? It's not like Thinkorswim's open interest or any options platform. When they show open interest, it's not on their platform. It's on the Chicago Board of Options Exchange's platform. So, I mean, yeah. But it does look as if, though, a lot of people, at least a lot of people, have started buying more of that strike just based on that news alone. So some people are just, I don't know. Why would you chase that trade? It's not a very good trade. It is if it continues to go up, but damn, like you could have deployed a lot less money for the same results by buying a cheaper call. So she's obviously, if the news is true, expecting this to go higher. She's worth 180 million or something like that. So $5 million is less than a 1% loss for her. Sorry, it'd be more than that. It would be a couple percent loss. Or a few percent. Not much on her overall portfolio. Or her overall wealth. So it's not a terrible trade. It's just I don't understand the reasoning for that strike. Like, why that strike? That is so just random. Thank you. We'll wait for January to catch the whole Patreon month. Yeah. Yeah, that'd be the smartest thing to do. Wait till the first of the month, and then after the first, like on the second or whatever, go ahead and jump in there. Send me a message on Patreon once you've done it, and then I'll send you the link. And I appreciate you in advance. Netflix, like all of these are just they're just up. Apple would be the best one because it's having a pullback. It's just not really pulled back very far. And the skews against us again. Yeah, you'd be risking 300 to make a potential of 200. That's not good. Not good. If you go out here, you could do better, but the chances of making money on the trade are less likely. Like something like that, you'd be risking $100 to make a potential of $400. That wouldn't be bad. That's a $5 wide strike, but you're buying it pretty much way out of the money. So you need Apple to get way up in here in order to make, that $400. We can analyze the trade right here. So you can see you would be making $190 is what you would be making around 205. So you need this right here to get all the way up to 205 in order to make $200. Out here at the second standard deviation, you'd be making 300. But then you need price to be around 216. And like I just showed you, like 216 is up here. I mean, that's a freaking hell of a move. for 38 days. That's just right here, right? So you need to get it up there in that amount of time. When the skew's high, man, it messes everything up. We actually got a low tick back under 134 Friday. Or today, I mean. No, it's Friday. Anything above 130 is still high. It's still high. But it's coming off, so that's pretty good. That just means it's better to build spreads when your skew's not real high. When your skew's real high, you typically want to be looking to just sell calls. But yeah, not on something that's going straight up either, right? We don't want to sell stuff that's going straight up. You would want to sell something that's in a range. Pepsi. So we thought Pepsi was done, but it looks like it's trying to claw its way back. Trying to claw its way back, but it could still be a short. But support held. Support held. You're getting a bounce off of support. Let's go see what does it cost to buy a put on Pepsi. It's pretty expensive. But they're $5 wide strikes. So there is enough maneuverability in here to make it. It's just you're going to risk that $400. So what's going down? Is it AI or is it CLS? Something's going down. CLS. All right, so let's just go ahead and close that trade out, as we've gotten pretty much what I wanted out of it. Let's see if we can get filled at 110. And then I'll keep AI on. We're going to keep AI on until it breaks down. If it breaks back down under here, we're going to close it out. But the next one to watch is Philip Morris for a put. PM. We're watching 92.83. A close back under 92.83 is going to be a put. S&P 500 coming off. Dollar's getting a bounce. I wonder if S&P ever moved up to 15. No, I don't have it here, but it came off from 48.20. So right around 5 points. Yeah, so it would have hit the expected move to the upside. So Philip Morris is the next trade. Like I said, I'm just going to buy a put. I am not going to do a spread. Just going to buy a put. 38 days out. It's $1.90. Go ahead and fill it. If we can get filled on the midpoint, get filled on the midpoint. I would rather wait till the end of the day, though, because Yeah, let's wait till the end of the day. But put that trade on like 10 minutes before the market closes if you're trading under that price. And we just need this to tick back up a buck or whatever a little bit to get up to 110, and then this trade will get filled. The CLS. We want to get out of it because it's just not breaking out. I've been sitting in it and sitting in it and sitting in it, waiting for it to break out. It broke out. It's just not generating enough profits to stay in the trade. I could put that money to work elsewhere. You know what I'm saying? Instead of just leaving it in that, I can put it in something else, like Philip Morris or this if it finds resistance. The resistance I would want to see it find would be here. 72.65. There's a $2 potential move in there on ADM. No, it wasn't ADM, was it? ADM doesn't have... Yeah, it does. Yeah, ADM. That's why I moved it down. So ADM, Philip Morris, those are the two trades I like right now. JP Morgan's making highs again. MicroStrategy is going to do whatever Bitcoin does. PSTG was one we already made our money on. We're out of that, so we can get rid of that. XLF, I was looking for a pullback, but it's consolidating the gains. SPX, Pepsi. This one's another one where we can look for potential fills to the downside on puts, but I want to see it close back under the open. It needs to close under that. I would rather it close bearish on the day, though. If it closes bearish on the day, I might even open a position there. And TLT. Now I'm going to give TLT a little bit more time. As I took a trade on TLT here and then took it off up there because it was just the profits were like it had too much money on it. And I just bought one. Then the next time I buy TLT, I'm going to buy 3 of them. So that way I can take profits if it moves in my direction and then leave one on forever. Right? Because TLT is cheap enough to do that on the options side of it. But we'll see what happens here for the rest of the day. Let me go back in the bonds real quick and just check the yields. Yeah, the yields are still down. The 2 years coming down, which ultimately we would read that as being bullish for the risk markets. But this is your TLT here, so not looking great. It made a fresh low a day at support, and it's bouncing. Bouncing at support. So if you wanted to buy a put on the TLT, you could, but I would only be aiming for that low there. I wouldn't be expecting a much bigger move than that. And that's only a 50-cent move at best. You gotta ask yourself, is it even worth deploying capital for something that small? If you think it could fill the gap, that would be a little bit better, as that would be a couple $100 winner. I just don't know. I'll leave it up to you. All right, if you guys have no more other questions, we're going to wrap this beast up. Once again, for anybody that hasn't heard or did not hear, these are the ones we're looking at. We're always going to keep an eye on TLT. But ANF, wait, what was this? No, this one was the one. Let's get this out of here. So we're looking at TLT, AI, ADM, and PM. TLT, we're looking for a deeper correction to get long. AI, I'm already long, and I don't want to see it lose this area down here. So if it closes a daily under 28.27, I will close that position. ADM, we don't want to see daily closes above 72.65. As long as it gets up there and rejects, we can look for put entries. And in Philip Morris, same thing. We're watching the daily close to make sure it closes under 92.94 or 92.83 to buy a put position, looking for it to get back down to 91 or 90 or 91.42, somewhere in this area in here. So those are the four that I got my eyes on for today. All right. With that being said, you guys have a fantastic rest of your day. There is no trade today, anyways, on any Forex pairs. We're currently on Aussie dollar testing the yearly opening range, so you can't do nothing there. I like Aussie yen, but I was wanting a retest of daily support, and it didn't give it to me. And then pound dollar, same thing. This looks inherently weak compared to the euro. Like you can see how the euro is already broken out and moving higher. So maybe there's a trade on euro pound. Let's go look. So I would be looking for longs on this, but there's no technical setup on it. Yeah, old weekly res. So 86,569 old weekly res, and that's just because that's where all the moving averages are, or 86,640, and that's this candle's close here. Maybe a retest of that. If it holds a support, we could look for long positions. But pound might strengthen, and if pound does strengthen up, then it's probably going to blast right through that. Very choppy asset class. Very choppy. It always is. I don't trade it very often because it doesn't work out as often because it's so choppy. And Bitcoin, we're looking for shorts, but we needed to pull back up to 43,167-ish on the week's platform. So we needed to pull back up to and around this area in here. Like there, 43,128-ish. Well, we might have missed the boat on that. If we did, we'll wait for daily res to show itself, and then we'll look to short daily res. But either way, you're at daily support. So if you think this is a bull flag and you want to get long, I mean, daily support, watch daily support for long entries if you want to, right? And with that being said, we're going to wrap it up. Wait for January to catch the whole. Oh, already read that. All right. So, yeah, you guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.